Good morning, good morning. What's up, everybody? Quick audio test. Let me know if you guys can hear me and if you guys can see the screen. Make sure everything is point. All right, sweet, good, nice. I'm glad we're good. Glad we're good. We'll be beginning at 11 a.m. Just waiting for some more people to trickle in here. Thanks everybody for coming here this morning on a Saturday. What's up? Yeah. All right. So, all right, we're good. We're good to go then. I'm literally just waiting for 11 and then I'll begin. All right. We go. All right. So, what's up, guys? Thanks for everybody for being here today. We're just going to be going through exactly the process I use to use my indicators right here. So, let's get into it. These custom indicators have helped me get over $2 million in funding and have reduced my trading time from 3 to 5 hours per day, sometimes even more, to now just less than 30 minutes. And most traders fail because they miss high probability setups, don't have a clear market bias, they don't have a strategy that actually works long term, and they don't manage their. And I struggled because of that. I had a lot of those issues myself. So eventually, later down in my trading journey, I found a strategy that actually worked. And I just started focusing on less, simplifying all of my trading, focusing on just a few concepts: order flow, fair value gaps, and liquidity. Which, when you really think about it, it all comes back down to order flow, because if you think of order flow, an order flow leg is just fair value gaps and liquidity. So if you really want to simplify it even more, it's just order flow. Just this right here. And I was profitable. Just simplifying everything, stripping all the unnecessary things. I used to be trading a million different concepts. I stripped it down, focused on the basics, and came to just this right here. But I would still have problems. Even with being profitable, I would still have problems. For example, I would miss my A+ setups because I wasn't on the chart at the time. You guys know me, I have a very large watch list. And for example, there's like 30 pairs on that watch list. And often I'd find myself missing a lot of setups because there's just no way I'd be able to be all over the place, or I would be busy doing something. I would forget to check the charts. And I was just craving for a way to get an alert the moment I actually need to be on the charts, so I can literally not miss anything else, right? Next, I would take avoidable losses because I'd get busy and couldn't be at the charts at the right time to actually trail my stop loss effectively. For example, I enter a swing trade, let's say in the morning, and then I have a busy day. I go to the gym, I go see my girlfriend, I go out, and I just completely forget about the charts. And then what happens is I completely just forget to recheck the charts, see when I get a new order flow leg, right? I trail my stop loss based on order flow legs. And I would take unnecessary losses because I wouldn't know, and I would just forget to check my position. We get a new leg. Oh, didn't trail my stop. All right, took a loss when it could have just been a break even if I would have had the alert. And the next, I would get lost in lower time frames, end up trading counter trend and losing. That would happen a lot. I would get blindsided by the higher time frames. Maybe I'm scalping and I don't see a 15-minute fair value gap above me, a 1 hour fair value gap above me, and I would take a very low probability trade. Right? Even eyes tend to slip up sometimes and just forget to check some of the higher time frames. So because of all these problems, I set out to create a set of tools to actually fix these, right? And I wanted to automate as much as possible so I don't have to make decisions on the fly. Because less in the moment decisions equals less dumb mistakes. So 1 year ago, I partnered with my developer to create these indicators that solve these exact issues, to fully customize my entire strategy and streamline it as much as possible, right? This is where Nils come in, the legend, the GOAT. He's in chat right now. He is the developer with this, and I've worked with him closely for a while now to do this and make this a real possibility. So since our launch, literally a few months ago in December of 2024, we've had almost 1,000 traders use our indicators. We have a flawless 5-star rating, and we have a bunch of people getting funded, over 2.8 million in indicator member funding. And this is for traders who struggle to get a clear market bias, miss profitable setups because they can't monitor the charts 24/7. They feel overwhelmed by trading complexity and need a simple, proven system, and those who struggle to manage risk effectively. So how did I use the indicators to get 2 million in funding capital? So step 1 is marking areas for pairs on our watch list. So with the order flow indicator, it automatically detects high probability zones and targets. So with that, you want to mark zones you want to monitor with the entry alerts indicator. So once we have a zone, we will use the entry alert indicator with that zone to get alerted when we actually get a rejection out of that. Right? This is what we're going to step 2, where we're waiting for price reactions and getting real-time alerts. So instead of watching the charts all day, you can use the entry alert indicator to monitor setup. So for example, just like a really basic example here, let's say we have a daily fair value gap, right? Daily fair value gap, daily IRL to ERL. And you want to know when you get your 1 hour impulse shift, your 1 hour fair value gap away. Or you want to know when you get your 1 hour change in state delivery, even, or unicorn. This is what that allows you to do, right? You don't have to stare at the charts and constantly check up on it to see, all right, when is this going to set up? You will literally just get it the moment it happens. These alerts come via TradingView. You can get it to your phone, your Apple Watch. We even have Discord alerts as well. Now goes into step 3, which is using the risk manager indicator. And what that does, it automatically calculates your stop loss placement based on the actual order flow. You can get your precise position size calculation based on your custom risk per trade, whatever you may want to be. If you want to risk 1,000, you want to risk 500, customize that, and you'll get your exact position size. And as well, adjust stops as the trade progresses and lock in your profits dynamically with the way I show my stop losses, like I was mentioning earlier, based on order flow legs. And step 4, we have these chart add-ons with the navigator indicator, which you get automatic kill zone placements. You can see each day of the week and all that marked directly on your chart. Again, automatic daylight saving times as well, so you don't have to worry about, we moved an hour, I got to change all of that. It does automatically. Like a lot of other indicators out there don't have that. I believe we're the first to have daylight savings automatically implemented with the whole kill zones. So what do you get with your membership to these indicators? It's a whole lot, right? You get your order flow indicator, which fully automates chart markings and directional bias. You have your entry alert indicator, which will allow you to never miss a trade again with those real-time rejection alerts. Get your risk manager indicator, which will help you protect profits, manage risk like a pro. The navigator indicator, which does the automatic kill zones, chart add-ons, and automatic daylight saving times, as well as a feature I actually did not mention here. I'll actually show you in the charts, because after this presentation on slides, I'm going to go show you guys in charts, real chart examples, of course, and my process. But something else really cool about the navigator indicator, I will show you guys with that. The order flow alerts with Discord. That's one of the sickest features, I really do think. We have a custom bot on Discord. We call it the IRL rejection radar. And that simply just gives you alerts on the monthly, weekly, daily context across, I think, like 50 assets when you get your input shifts out of that. So that's really, really sick. And on top of that, you get your exclusive trading community for indicator members specifically. And me myself, I'm often dropping a bunch of insights in there that I don't share with the free group. Really like mentorship level insights. Those who are in there know exactly what I'm talking about. I answer all their questions with very in-depth video responses, and I'm very active in here with them as well. It's more in depth what I talk about with this the group right here. As well as you get your comprehensive how-to guides with how to master the indicators quickly, and custom guide built directly into WAP, as well as access to the masterclass I did for the group over here, like an hour and a half long masterclass, literally diving into every little thing about my model. You will also get access to that, right? And in case you're wondering what the price is, it's $49 a month. Here, a 30-day money-back guarantee if you're not satisfied, and we'll refund your purchase if you're not happy. Right? There's no risk. If you want to try them, you hate it after a month, 30-day money get back guarantee. No questions asked. All right. So there's really no risk if you just want to try it. If you don't like it, is what it is. All good. All right. Is this right here? So the live training bonus. So this was the bonus I was talking about for you guys who wanted to watch this stream live. You are getting a bonus where, for attending this webinar, we're offering you guys an exclusive 40% discount off your first month, right? And that's only for those who signed up beforehand, like I just mentioned. And if you want access to that, you can use code LIVE40 to get that exclusive discount. Okay? So that's 40% off your first month. Pretty major right there. So yeah, Neil's just linked that in the chat right there, right? But what we're going to do now is what I'm sure everybody really wants to see, actual chart examples, right? So let me just switch over to TradingView real quick here. Here we are, right? TradingView. Should be able to see TradingView, right? Making sure it's popping up here. Biggie T, what's up? Yeah, it works with anything, with every single asset you could have on TradingView. It's going to work with ES, Bitcoin, of course. It works on everything, right? So we are on the first example here I wanted to go over. And I want to show you guys exactly how I go from pretty much getting the idea to, once I find the idea, how am I using the indicators to aid me in the process to the point I'm actually taking the entry, right? And I've written down the process that I use every single time right here. So the first thing I do is I filter the watch list for high probability setups. And you guys know I do this every single Sunday with you guys live on the weekly forecast. So if you're curious about how I'm filtering, how am I getting to the highest probability setup, that comes in the forecast, right? I do that every single Sunday with you guys, filtering the watch list. It's literally this watch list. I'll show you real quick right here. This watch list. So my summit watch list, I'll filter that, as well as some of these futures right there, right? And we do that every single Sunday. We build our focus list right here. We put pairs that have long context. For example, let's say we have a very clear daily IRO to ERO, and it's ready on Sunday. I see it. All I'm doing is putting on the long watch and short watch, same thing, daily bearish, monthly. And then the waiting list, if you're wondering what the waiting list is, that's things in which I have a clear bias on, but context is not ready yet, right? So I'll put on the waiting list. I still need to wait for context. That's exactly what I use these for, okay? And I do this every Sunday, all right? So in case you're wondering how exactly am I filtering, that is where you can watch that process. So the number one thing to do here, first filter for the high probability setups and build our focus list. All right, once that's done, or these actually are in conjunction with another, we're filtering with the help of the order flow indicator. All right, and that's the first indicator right here. The order flow indicator is what is marking up all our higher time frame relevant levels, the fair value gaps, the relevant order flow legs. And just a word on that, what the hell is order flow? In case you're wondering, what is order flow and what is an order flow leg? Well, I'll just break it down to you very simply right here. And this is how I view price. And these are the only type of fair value gaps I use, right? So an order flow leg is comprised of a swing low to swing high with a fair value gap in the middle. That's it. And we want to be using the most recent ones because the most recent ones are going to be respected. All right. Now back to what an order flow leg is. The fair value gap in any price leg. You have a price leg, the fair value gap presence is what makes it high probability. If there is no fair value gap, I don't consider a price leg an order flow leg. So whenever you hear me talking about order flow and order flow legs, I'm always referring to a swing point with a fair value gap in the middle. So if we look at the left right here, this right here on GU is what I would refer to as an order flow leg because we have a swing high, swing low with fair value gap in the middle. And within those order flow legs, that is, again, the only fair value gaps I'm ever interested in. I'm not interested in old fair value gaps on the left side of chart, really old ones. I'm trying to find an example. Maybe this is not the best one. But I'm only focusing on order flow on the most recent price action because that is always going to be the most respected. That is how you simplify viewing price. Okay. So that is how I view order flow, and that's what the indicator does on a multi-time frame basis. So right here, it's marking out the IRL to ERL for us, right? And in case you're wondering, well, does IRL ERL have anything to do with order flow? Yes, an IRL to ERL is simply just an order flow leg playing out, right? Because what is this? This is IRL, this is ERL. That's literally just an order flow leg, right? And that's how you do that. We could also do ERL to IRL, which is what this example is right now on the monthly. We just took external range liquidity. This is internal range liquidity. We can draw into that and trade longs towards that. All right. So that is what the order flow indicator does right there. It marks out all your relevant levels. And actually, I want to show you right here just to get a better understanding of what exactly that looks like in real time. Just want to go to a replay feature. Let me just let the chart load. The internet can be a bit slow sometimes around these parts of the neighborhood in my house over here. So let's go back to, for example, maybe right here, just to show you guys. Just to show you guys what this looks like in live action, because it is showing you the order flow indicator works on the basis of incorporating as well magnet theory, which again is all stuff I cover in the YouTube. It's simply the fact that the higher the time frame, the stronger of a magnet it will act on price. So it incorporates all of that concept, and I'll just show you right here what that would look like. Let's play that in real time, or on 3 times speed, better yet. Damn, it's pretty laggy right here. But you'll see once order flow is complete, the indicator will remove it. If we have a 4-hour fair value gap below price, it will mark that out instead of the 1 hour. It will delete the 1 hour. Over there, that was actually a really good example of that. Let's go back to that. Moving quite fast there. So it will mark all your relevant order flow levels, all the relevant fair value gaps, as well as the overlapping levels, right? A common misconception people may have with our indicator is that it's just a fair value gap indicator, right? And there's millions of those. No, it's way more than that. It's way more than that. It's not just a fair value gap indicator. It's not just marking every fair value gap. There's an entire logic I worked with Nils very closely with for coding this the correct way I view price. And it was like building a puzzle, because there's a lot that goes into it in terms of the correct fair value gaps that you have to use. And this is what we have achieved with the indicator, right? So for example, play from here. Hopefully it doesn't lag. So you see this 1 hour fair value gap right here. If we move forward in time, it's very laggy. You get a new 4-hour gap right here. And do you see how the indicator automatically deleted that 1 hour fair value gap that was down below here in this price leg? That is because the higher the time frame, the stronger the PD array it is, right? So if we have a 4-hour fair value gap created above a 1 hour fair value gap, well, now the only relevant level becomes that 4-hour fair value gap that got created right here, and not this 1 hour fair value gap that was created here. And for that reason, the indicator understands that, and it will delete that 1 hour fair value gap automatically mark the 4-hour as well as the overlapping level. And now what this becomes is the relevant level for price to actually move higher from, right? So if I go to the 4-hour, hopefully it doesn't take 3 business days to go up the time frames. You would see the 4-hour for value gap right here. And the indicator understands that because it's constantly looking through all the time frames above the one you're currently looking at and taking into account that magnet theory. All right, go to the 1 hour back here. And again, if you're wondering what's magnet theory, it's very simple. Again, I cover it in one of the latest YouTube videos. It's just simply the fact that the higher time frame fair value gaps are always going to take precedence over any lower time frame fair value gap right here. Again, so let's just continue moving forward in time and just see how this indicator works. Again, internet B, not very friendly right now. All right, and you see how we just got a daily for value gap right here as well. And this actually, let's not get ahead of ourselves. This is where the entry actually comes right here. It's automatically marking the daily, the relevant for value gap right here. And from here, I want to dive into this GU example, which is one of the trade setups I took. All right, so let's actually just go through this process together on a real trade example I took here with GU. So let's go over here to where Monday would be. So this is what we would look like on a Sunday forecast. All right, so let's start with step 1. All right, so this is Friday close. We're coming in on Sunday. We're doing our weekly forecast. We're filtering our watch list. I come here, I determine that GU is looking really clean for longs, right? And the reason it's looking nice for longs is because we have a monthly fair value gap up here. We are drawing towards, we have monthly external to internal. Now you may be wondering, but Pickle, you said before that you don't really trade external to internal because it's counter trend. The only time I'll really trade ERL to IRL is when it's formed on a monthly basis, right? Because now you have a lot of weekly and daily order flow that you can work with towards that monthly. And from my experience, it is still high probability, and I tend to do well with that as well. So the only scenario, and we have a weekly order flow leg created right here, right there, that weekly order flow leg. And actually I'll just move back in time as well to show you how that would look over here with how the order flow indicator would mark that automatically, because what it's doing is it's automatically putting more focus and prioritizing recent order flow. All right, so here we have that fair value gap pointing lower, but once we have this new weekly fair value gap created right here, what it's doing is it will prioritize that one, delete this, because now this becomes old order flow, because like I mentioned, when we're looking at order flow, we're always working with the most recent order flow legs. This is the most recent order flow leg. Swing low, swing high, fair value gap in the middle. Now weekly order flow shifted bullish after sweeping a monthly discount array, which is great. Monthly order flow, weekly order flow now pointing higher. Not only, like for example, off a monthly, we're looking for daily reactions. Now we're getting a weekly reaction. This is very strong. And we have a bullish for value gap bearish for value gap up here on the monthly that we can draw up towards. This is the target. And this right here is the compass pointing up towards that target. So this is really nice. Order flow pointing higher right here. Go back to the daily. Let's go back to that example I was talking about, that specific example, which was the trade right here. Let's not get ahead of ourselves. All right. So on the forecast, we have a daily fair value gap right here. So what do I do? Well, the first thing I do is go to my entry alert, right? And this is the indicator that will alert you when you get your 1 hour fair value gap out of your daily, or 1 hour change in state of delivery, or unicorn, all that, whatever you decide. So what I do in this scenario when I see a potential context area right here is I would, first of all, the way you utilize this is, if you take a look right here, you want to first set the IRL inner rejection price. So what we're doing here is we're marking out the fair value gap, and we're marking out the zone, and we're pretty much telling the indicator the zone in which we want to actually receive that rejection from. And so we do that right here. Set the IRL inner price, and then you want to set the IRL outer price, which is this down here. And then you want to select the IRL confirmation candle. So it's just a little 3-step process when it comes to marking it. You do the inner, you do the outer, and then you mark out the candle that actually confirms the IRL, which would be this one, right? This is the confirmation candle. So then we set that right here, and then this pop-up pops up. And what you want to do is you want to make sure you have a daily IRL selected, right? Because now we're working with a daily for value gap right here that we want to see a rejection from, right? Because the daily for value gap is IRL to ERL. We can look for longs out of up towards that monthly gap as a target, right? So this is why I'm long right here. Order flow is pointing higher, right? So this is a relevant trade area for me. Just clean daily context. It's as clean as it gets. So I want to mark that. So that's what I do on my forecast. That's what I do on Sunday when I see something that's interesting, right? So this is the daily. And then over here, we have your entry models. We have 5 entry models. We have the unicorn, the order flow chain, the impulse shifts, and your change in state deliveries, which we added that recently because there's a lot of CASD traders out there, and it is a totally valid entry model, which I think just adds to the indicator for you guys who do trade that, right? So we thought that was a really neat thing to add for you guys. But for me, I don't trade it. So what I would do personally is actually just deselect that. And for you, what you can do to really customize this and personalize this is just deselect any of these that you're not interested in, right? So if you just want to get alerted of an impulse shift, you would just select impulse shift like that. But for me, personally, I typically just have everything else on except CASD. And we have this set to auto. So what is auto? And that auto is simply set to the automatic time frame alignment that I use. So I recommend you keep this right here. For the exception that, for example, is there's like a trade setup in which you might want to demand more confirmation. So let's say instead of a daily to 1 hour, I'm not so sure about this context. Maybe I want a little more confirmation. I'll go for a 4-hour impulse shift maybe instead of a 1 hour, right? So for examples, you want to actually demand more confirmation. You can do that as well and get alerted of your extra confirmation via that way. But we do have this tooltip right here that shows you exactly the time frame alignments that I use and that I recommend you stick to, as well as exactly how the indicator is marking and identifying the impulse shift with those notes right there. So for example, the unicorn, it is showing you exactly, first of all, how to look for a unicorn, as well as the proper time frame alignment right there and all these tooltips. Okay, I recommend you keep this on auto, again, for the exception if you want to demand more. And that's pretty much that. So what you would do is select apply. And then you get your rejection alert right there. It creates that zone. So let's actually go down into the 1 hour right here to take a look at that, what that looks like. Right, so it creates that zone. Let me just let that load right here. Move a little forward in time. All right, so now we have that daily fair value gap created right there. And now you may be wondering, this kind of looks ugly because now we have the order flow and entry alert indicator together, right? And I'll actually was going to get into that, where I only use the entry alert to set the alert, and I don't keep the zone on. And what I mean by that is once you actually set your zone here, what you do is, for example, we have this little tooltip right here that actually reminds you, if you want to get your alert, for example, on the 15-minute, you're looking for a daily to 15-minute chain, you want to go to the lowest time frame possible that you want to get an alert on, right? So from a daily, the lowest time frame you can get is a 15-minute, right? Because that's 15-minute. We don't have anything lower than that. That's what we're looking for. So to actually set the alert with this, you want to go down into the 15-minute. You don't want to go to the 1 hour, because if you set the alert on the 1 hour, you're not going to get alerted of the 15-minute. Okay, and that's why we had that tooltip right there. You go down to the 15-minute right here, right? So we want to go to the 15-minute, and we set up our alert right here. So what you would do is you would hover over it. There's this 3 buttons right here. And since this is replay, it's not going to let you actually set an alert. But in live price action, there will be a button right here that says add alert. And all you do is click add alert. You confirm with a little pop-up here, and that's it. And once I do that, I delete it. I delete this, literally just click the trash bin, and the alert will still be there. It will pop up right here, right? And if you want to confirm that, this is where you do that with the little clock right here. You would pop it up, and you would see your alert right here. For example, this is what it would look like. It would say Sir Pickle entry alerts. And that is that right here. Again, Sir Pickle entry alerts. That's what that should look like right there. But what I do is I typically delete it because I like to just have the order flow indicator right. Right. But for the sake of this example, to show you like visually when you get that alert, let me show you what that would look like. So let's go back to the 1 hour because I did take this trade on the 1 hour. Actually, it wasn't even off that daily gap. This is what I was going to go into as well. On Monday, we get a new candle higher and we get new context. All right. So what happens right here? Well, now we have a new area we could move higher from. So what I would do is, again, that alert is in there. I can delete that. I would set a new entry alert. So this is exactly what I did right here. There's a new fair value gap. We do the same exact process, inner, outer, creation candle. This is a daily. I don't really care about the CSD myself. So I click apply. And now we have a new level I'm looking for high prices from. Okay. And this goes into checking the waiting list daily or checking your watch list in general daily to see if you have new context. Maybe you need to set new alerts. That's exactly what scenario. Have a new daily fair value gap right there. Look at the order flow indicator. That should mark it automatically on this next candle. Once this candle closes, it should mark this swing high right here, overlapping with that fair value gap right there. Right, and that's what that would look like. So let me just show you. Order flow indicator does that automatically. That saves so much time right there. Let's go now to the 1 hour. Show you exactly when you would get alerted, right? Just to show you what is happening right here, because it also marks up the actual entry pattern for you. So let's go and move forward in time. Do you delete the old alert, Theo? Yeah, I deleted it, but the alert stays. The alert stays. So for example, if price does sting into that lower daily gap and we do get the reaction out of that, I do still get the alert, right? Because that can still happen. I still would have that one. Oops. Okay, we moved a little too forward. I want to slowly walk you guys through what that would look like right here. All right. So price comes into the rejection alert zone, right? Which is just this order flow, like right here. The order flow indicator would mark that same exact zone. But let's look at what that looks like when you actually get alerted. So let's move forward in time. Remember, I'm looking for a 1 hour impulse shift off of this daily. So at this exact moment in time, once this candle closes, you see that bell? That is signaling that the notification has been sent. All right. You get that to your phone, your Apple Watch. You even get that with the Discord alert bot, our rejection radar on Discord. So even if you forget yourself to set this alert, we alert you in the Discord automatically as a bonus as well, as a heads up. That's really, really with that as well. It just automatically alerts you, even if you forget. All right. But this right here is your 1 hour impulse shift as well as rapid impulse shift. Now, again, what's a rapid impulse shift? For those of you wondering, what's a rapid impulse shift? All right. Well, that's simply just an impulse shift with the fair value gap overlapping with the one that came out. So the fair value gap that came in is overlapping with the fair value gap that came out. That's simply all a rapid impulse shift is. That's what just differentiates it from an impulse shift right there. That's it. And it's just higher probability overall when you see a rapid impulse shift when they're overlapping like that. It's just overall higher probability. So that's why we have it as its own thing right there. But you would get alerted right there on both of that. All right. And this is where the next step comes in. So let me take a little step back right. And all right. The risk manager indicator. This one right here. So this is the one which automatically calculates your position size based on the stop loss you have right here. All right. So let's actually put this up. And this is step 6, right? So we went through the first steps right here. We filtered for a high probability setup. We had the order flow indicator aiding in our analysis. We set the entry alert on our context area. We then checked again if we had new context later in the week. We did. We set a new alert. We got the alert right here with the bell, right? That's our phone. And it would say, like, to your phone, it would say 1 hour impulse shift created off daily. It's very simple. It's very clear as to what's happening in that alert. And then we're on step 6. So you get alerted, and now you want to use the risk management indicator to position size and set your trailing stop loss alert. And this is what that looks like. So that's called the risk manager right here. So open that up. And there's 2 modes right here. There's the buy mode and sell mode. If you're looking for longs, you would just toggle off the opposing mode. So you're clearly looking for longs right here. And then you would go right here. Select buy mode, deselect sell mode. There's a little tool tip right there if you want to do that. And you can select your stop loss limit. So I've taught you guys, you can put your stop losses either at the bodies or at the wicks. If it's like a really long wick, I tend to put it at the bodies. So in this specific trade example, I personally put my stop loss at the body. So I change this right here and move it from wick to body, right? And then this is what my position would have looked like. And I want to risk $1,000 on my account. And that will tell you how many lots you need to trade. So 10.42 lots is my position size for this. And this actually is really nice. It was a recent update. Calculates position sizes on all Forex pairs. And we have this mode right here where this is the compact mode. By default, I believe it's on the detailed mode, which just shows you a little more about what's happening. A little bit more detailed in terms of going on there. But if we go back to the compact mode, see how it just sort of compacts things. Wow. But that's really, I keep it on compact, keep things really simple right there. We also have this feature where you can show the trailing stop line, and it'll show you how that's looking like. I'll show you that in a moment once we get to this example. Typically, I personally have that off. Again, I like to keep my charts super. All right. Sorry. And yeah, that is that. So at this point, what you would do is you have your position size, you have your entry right here, just to open up that fair value gap. You have your stop loss. You just set your order. All right. And then after your order is set, what I do is I set an alert on this indicator. So it's the same process for how we did the entry alerts. If you remember to set your entry alert, you just do these 3 dots, add alert. There would be a button in live price action right here. It's replay, so you can't do it right here. Same process for the risk manager. If I want to get alerted for my trailing stop loss, I will go to these 3 dots and there will be a button that says add alert on risk manager indicator. And you would be able to just click that and you will get your alert on the risk manager indicator. When you need to trail your stop, right? Now, about trailing stops, how do I trail my stops? So I trail my stop losses in 2 ways. And those 2 ways are based on, I'll just write it down here. And they're based on order flow, on the order flow legs, and they're based on the proximity to TP. Based on proximity to TP, right? 2 ways I trail my stop losses, and these are always going to be the only 2 ways I trail right here. Order flow legs and based on proximity to. So first of all, what do I mean by order flow legs? Order flow leg, like we just mentioned, is this: a swing low to swing high with a fair value gap in the middle. So when we have a new order flow leg, that now becomes a protected low. Why? Well, these order flow legs within your boundary, within your higher time frame context, are called short-term ranges. So let me just move forward in price. So I'll actually give you a cleaner example once we have that new order flow leg in price. So we get filled right here. Price comes into our entry, we get the fill, here's our stop loss. And for this example, let's put the order flow indicator back on because again, just want to clarify exactly how I personally use it. I set my alert and I delete it. So I'm going to delete it right here. It's gone. And I only use the order flow indicator when I'm actually viewing price. I only use the entry alerts to set the actual alert. I set the alert and I delete it. Again, I just want to hammer that down, that process, because that is exactly how I keep things clean, because that can get a little messy when you have the entry alert constantly on. I'd rather have the order flow indicator mark the entry for me, which it did right here. I'll show you. It also just marks out, if you have a daily, this will mark out your 1 hour impulse shift as well. Again, it's using all the time frames properly, right? So it's marking the fair value gaps you need to watch. This is the only gap you need to watch on the 1 hour. That is the relevant level, daily to 1 hour, right? And that's your entry. So moving forward, we get the entry right here. There's our tag. So for example, for the sake of this example, so I can show you like a clean way to trail the order flow, trail based on order flow legs. Let's say we're targeting the actual context high. You guys know I always target 2R, but I'm just doing this for the example of, for the sake of this example, right? Right. So let's move forward in price. So what happens right here? This is when we get a new order flow leg. Okay, new order flow leg created right here. Why? It's very easy. Why? We have a new swing low, swing high. All right. And something I failed to mention here as well. Whenever you're setting your trailing stop alert, make sure if you took your entry right here with the wick as your stop loss. Remember, we made this the wick, the body. I mean, change it to the body, stop loss to the body, right? If you're doing your trailing stop loss alert, change that back to the wick because you want to be trailing on the basis of the actual low of the new order flow leg, not the body. All right. So you want to change that back once you take your entry. You want to change that back to the actual body. Sorry, I keep mixing those up. To the actual low, right? Because we want to focus on the low of the new order flow leg right here as the actual stop loss level. Okay. So this is a new order flow leg. So this is where I would trail my stop loss up to that new leg. And now we have secured profits right here. Because what happens is all these order flow legs inside of context, those are called short-term ranges. Right, so I'll just write that down right here. This is what I refer to as short-term ranges. It's actually looks nice in all caps like that, which looks nicer. Okay. So these order flow legs inside of context, the short-term ranges, the properly aligned ones, right? So from a daily, we have a 1 hour, right? 1 hour order flow legs that we're working with. Meaning these short-term ranges, these lows are what we consider protected lows. So that's a protected low. That's a protected low. If we got a new order flow leg right here, this becomes a protected low. And we expect these order flow legs to hold until context is taken out. So that is the basis in which we are actually trailing our stop loss. Just using that logic, using the logic that these new order flow legs are protected swing lows. We want to trail based on that. Now there's an exception. And the exception is if there is a higher time frame fair value gap created below that. So for example, if we have a new order flow leg created right here on the 1 hour, so we have a 1 hour fair value gap right here, but there is a 4 hour fair value gap that gets created right at that low. Does this 1 hour order flow leg, this 1 hour short-term range now become a protected low? Absolutely not. And the reason is because now we have a higher time frame fair value gap created below it. So like if there's a 4 hour gap below this 1 hour gap, this goes back to magnet theory. Very simple. The higher the time frame, the stronger of a magnet it will act on price. And it makes these legs low probability because there's a higher time frame fair value gap below you. And this is the beauty of the order flow indicator. Again, it will automatically show that for you. Where in the past, I would honestly get blindsided a lot myself, and I would forget to check the higher time frame. I would trail my stop loss prematurely up to that level and didn't realize, oh, wait, there was a 4 hour gap below. We could have just retraced, and I'd get literally bottom ticked, and then price exploded in the direction I was looking for because we just came into a higher time frame fair value gap, and I just choked my stop loss right up to that low, right? And I'm sure a lot of people have experienced that before. Because the higher the time frame, the stronger the PD rate is. And for that reason, that is the exception in which these short-term ranges will not hold. Right? So you always want to be aware of what the higher time frame above you is doing. This is extremely important to always have in your head when looking at charts. Whenever you're looking at a certain time frame, always ask yourself and always be mindful of, is there a higher time frame fair value gap soon to be created on the time frame above me or already created on the time frame above me? You have to be very aware of that because that is one of the biggest things that holds a lot of people back. Just not being aware of what the higher time frame is doing and getting locked in on just one time frame. But you always want to be aware what and where are the fair value gaps on the time frames above me. That is huge. That is absolutely super big. And the order flow indicator really helps with that because it automatically will draw those for you. So there's like no way you're going to miss things like that anymore. All right. So that is that. And that is how I would trail. And let's just see how this ends up playing out right here. And that's actually another entry, by the way. You can literally play all the short-term ranges within context area up to the ERO. So for example, I know a few people actually took both of these entries. I just took this one right here. You can also take this one. That's valid. This is also a valid entry, right? That's what it's marking out right here, right? The position, or sorry, the risk manager right here. It's just another order flow leg inside of context. And say you want to risk 2R right here. This is another opportunity. Just in playing the short-term ranges within context is very valid. So this was leg 1, short-term range 1, short-term range 2, and both delivering beautifully right here. And the order flow indicator deletes the fair value gap once it is complete. So the order flow indicator will keep your charts clean. It automatically removes that context once it's complete because now it's irrelevant. So it's nothing you really want to look at. Screen froze? Are you serious? Really? Are we good now? Damn, that's really unfortunate. Let me know if it's good. I'll take a pause for a second. I'll take a little pause. Damn. Screen is frozen. Can you guys hear me? Really? Uh-huh. Be weird. We can hear. Oh, okay. What? Wow. So you guys didn't see like me at all? Like I was out. So you guys just heard me like ranting and not seeing what I was really. Oh, okay. I think we're good now. I have no idea why that happened. Oh man, that's a tragedy. Okay, can someone tell me where exactly? Oh man, can someone tell me where exactly we froze? Damn, because I talked about a lot right there. Someone tell me exactly where we froze for the wow, for the 5 minutes. Damn. Okay, we were talking about the first short-term range. Damn, that's a long time. Okay. Yeah, apologies. Apologies for that hiccup. There will be a recording, so yeah, can watch this again in case the flow of it is sort of getting all over the place right now with that hiccup here. All right, you open the 1 hour the rectangle. Huh. For the retracement. Okay, I wrote short-term range in all caps, and then that was history. Okay, I guess we can start from there. So I believe that was around here. I was just writing a short-term range. So essentially what a short-term range is, again, I'm sure you already know with how I was explaining it. It's just your order flow legs inside of context. So this low is protected, this low is protected, and let's say we had that low would be protected. And like I was explaining, the exception for that when you have a short-term range within context that is low probability is, for example, if you had a 1 hour gap right here. Again, I'm not sure if you guys saw this part, so apologies if I'm repeating it and you already did. But I am going to just just explain it from here. and just move forward with that, right? So we had that 1 hour fair value gap. For example, again, we got a new 1 hour leg, right? I just mentioned that short-term ranges. These are the legs we expect to hold until we reach context highs, and these are your protected lows. The exception is if you have a 4 hour fair value gap below that, like any fair value gap on a time frame above, that is created. Because now this leg becomes low probability as price is most likely going to draw into the 4 hour and then continue moving higher off of that. Right? So the 4 hour, using magnet theory, is a higher time frame, right? The higher the time frame, the stronger magnet is going to be on price. So when you have, for example, if we got a new 1 hour leg right here, let's just imagine this. I think this is, pretend we had it from right here. Let's say we had like a new 1 hour gap created right here. And we had a 4 hour fair value gap right here. Does it make sense? Like, not really. We could potentially retrace and then still move higher towards that, because the higher the time frame, the higher the magnet is on price. That is when you don't want to try your stop, when you do see a higher time frame fair value gap shown. And again, like I was mentioning, the order flow indicator will show you that. So you're never going to miss that anyways, but it's important to understand why it's being marked in that way. Okay? And this is a summit model example. The example right here is my swing model. So this is daily to 1 hour entry. If you want to also enter right here, that is totally valid. Like I was showing with this position sizing tool right there, you can just target 2R. This is your stop. This is your size automatically calculated. And that's also a valid entry, right? So what I was mentioning is that you can play all the short-term ranges that get created inside your daily context, as long as there's no higher time frame for value gap created below and you don't choke your stop right there, because that's how you get bottom ticked and you will get super frustrated. All right. And in real time, yes, it works instantly. It will automatically work. It will automatically mark your 4 hour fair value gap. Any higher time frame fair value gap that is getting created below you, it will automatically do that. Right now, what I was stressing about, you guys should really always hammer in your mind and always have at the top of your head is, are there any fair value gaps getting created above me? Are there any fair value gaps getting created above me? Are there any fair value gaps getting created above me? Hammer that point into your head. That you should always, always, always have that in the front of your head. Okay. So that being said, that is GU. That was the example. This was the trade entry right there. And I believe that's everything I wanted to speak about on this GU example right here. Just let me checking my notes, making sure there's nothing else. All right. Cool. Another thing about the order flow indicator, it saved me so much time, especially like when I'm drawing on mobile. When I'm on the go, when I'm using my phone, like in the past, I would have to do all my multi-time frame analysis on my little phone with my fat ass finger. It would be so annoying, like trying to draw, like being a little artist on my phone, and that just took so much time. I would get frustrated because it's really hard to be precise. I have a fat finger, and just having this automatically draw everything I need, and literally being able to open my phone, seeing the relevant levels, and just deciding, is this a valid entry or not? It's just so simple, and it's streamlined so much stuff for me, especially like on the go. If I'm traveling, if I'm in the car, if I'm even at dinner or something, all I need to do is pull up my phone. All my levels are already drawn. I just need to determine, me as the person in the driver's seat, is this a valid entry I want to put risk on? And all I do is log into the broker, say my entry. That's it. It's amazing having everything already done for me. And that's why I love this one right here the most, order flow indicator. But moving on to another example. I actually have a few more right here on oil. There's one on oil. And this one over here, as we wait for that to load, this one was from this week. So let's take a look at an example from this week. Yo, right, clan? Like, it was horrible trying to draw lines on the phone before all this. Man, like, you don't realize it until like you have the beauty of having everything done for you. Like, wow, I was looking like a caveman. But over here, let's take a look at oil. Let's delete the risk manager, because I only use this risk manager when it comes time to entry. I'm not constantly having it on when I'm on the higher time frames. That's important to note. I will toggle that off and I'll only put it on when it's time for an actual entry, right? So let's take a look at this oil, which was interesting, right? So this goes into the whole process. And let me go back to this and copy and paste this back on here. Mm, okay. And we have oil, right? This is from this week. And doing the watch list, doing the forecast on Sunday, I saw that this was interesting for potential longs. Right here, we had a new daily for value gap. Actually, this was created on Monday and Tuesday. So this is actually just checking your watch list later on in the week for seeing if we have any new daily context, which we do. So we sort of just fast forward over here, step 4, and just rewatching that watch list. So over here, and this was an intraday example that I took, right? And this process differs a little. When we're looking at my pulse model specifically, I'm looking at this watch list right here. So what you're seeing right here on the right is my pulse model watch list. Okay. So when we're thinking about Summit and we're thinking about Pulse, for those of you, first of all, who are wondering what is Summit and Pulse, Summit is my swing trading model in which I look for monthly, weekly, daily context and taking entries on the 1 hour and 4 hour. So I'm swing trading. Whereas the Pulse model is my intraday futures model in which I'm using the timeframes a lot differently. I'm not demanding daily minimum. I am going deeper in the lower timeframes and making use of a lot of different things. Okay. And this is the watch list for that. It is just futures. And I'm just looking at ES NASDAQ, the commodities right here, gold, silver, and oil, and then the currencies. All right. So the way I look at Pulse is it's sort of a daily mini filtering. All right. So every single day in the morning, what I am doing is I'm having a mini filtering session. Whereas for the swing model, I'm having that on Sundays for the week. Whereas for my intraday, I'm having a mini filtering session every single morning on these assets right here. And I'm determining, all right, is ES and NQ this group, right? Because the way I view these is groups. So indices is a group, currencies are a group, commodities are a group. Which group is showing me the clearest draw, the clearest bias for the day? And once I can answer that question, that is the group I will focus on. So I will literally just close things and just focus on that group for the day because it has the clearest bias. So that is filtering my little watch list right here intraday every single morning for what looks clearest, right? So that's the difference as well between Pulse, where I'm not filtering like this every single morning. It's different for Pulse, right? So that is why I saw this on oil on Tuesday, because I'm checking these every single morning. And I saw a new daily context right here. And I saw that and I went, okay, this is when I want to get alerted. I have a context area right here. Step 5, if new context forms, set new alerts. That's exactly what I do. Go to the entry alert indicator, inner, outer, select it, and I make sure it's set to daily because this is a daily context level. All right. And again, I personally don't use CISDs. I would toggle that off myself. And then I click apply. And then once I click apply, what I'm doing is I'm going down to the 15-minute because that is the minimum time frame I can see a potential chain of rejection that I want to get alerted from. And this is that tooltip I was mentioning earlier that it will tell you that, right? So if you don't remember what I'm talking about here, you will remember right here. It says open the 15-minute time frame before setting up the alert. So you can get the alert on that 15-minute time frame. Because if you just dive into the 1 minute, if you just dive into the 1 hour, you're not going to get your 15-minute alert. So you go to the 15-minute, you open the 15-minute, and on the 15-minute chart, you will set your alert button. You hover over here, 3 buttons, and there will be a button where it says add alert on live price action, right? And that's as simple as that is. And then once I do that, I'm deleting it, okay? I literally delete it. I just go to the trash bin and it is gone. For the sake of this example, I'm just going to just hide it. All right, so go to the daily. And let's actually wait for, so what's happening right here is I marked that daily automatically. I marked it myself manually, the order flow indicator will do that once this next candle starts printing right there. And there is the order flow indicator marking that. And what we added, this is actually a new feature right here. You see how it has like this little yellow glow around it, and now it says tooltip? That is because this all happened in one candle, right? And as a human, and as even the indicator, it is impossible to tell whether price first came in to the IRL and completed context, or if price first went higher to then move lower. So it's impossible to tell in this one candle what's happening. So for that reason, we have a tooltip right here on scenarios like this, which you will see them happen often actually. And it's telling you, it's warning you, this IRL ERL may have already been complete. So let me just hover over that so you can see what that says. The IRL to ERL move of this IRL might be completed already, right? And if we go to the lower time frames and the IRL is not being shown, that means it was complete. So let's just check that on the lower time frames right here. And we will see that it actually no, right here. This is the trade. Sorry, moved ahead of myself. Go a bit back right here. Right here. So in this scenario, we actually have not completed ERL just yet, right? And this is where the trade setup happens. So let's go into price action right here. Let's move forward. And I just want to show you guys again what the entry alert indicator would look like when you would get alerted. Let's move one candle. Because remember, off a daily, we're looking for a 1 hour impulse shift. So where is that? That would occur right here. On this next candle, boom, you would get the alert right here. So let me turn off the order flow first. This is the entry alert. This is what that would show. Once you get the bell, that's your alert going to your phone, whatever, you would get alerted. Beautiful. Again, the order flow also shows this all being marked automatically for your drawings, right? All automatically being done for you right here, just like that. All right, just marking the levels you have to focus on right here. So that's what that does. And if you're a swing trader, this right here is when you would already implement the risk manager, right? Your contract size, is your stop loss, at your orders, and then you're good to go. At your trailing stop. I doubt sometimes it's like the context is quite close. It's rare that we get another order flow leg maybe. But I still every single time I just set the alert for my trailing stop in case it does happen. So I would add alert, set my trailing stop, on the risk manager, set my trailing stop, add the alert right there. So again, on every new order flow leg, I would get that alert. I need to trail based on the order flow legs, right? This is actually quite an interesting insight. I don't know if I already mentioned this already because of the whole screen glitch. I don't think I've mentioned this anywhere actually. For your trailing stop, when you're looking at the order flow indicator, you want to have your order flow leg low, your new order flow leg low, actually be created and be resting above your entry. So when you have a new order flow leg, that last line of defense, just a swing low that creates a new order flag, that level has to be above your entry. That's like a little filtering, a filter for when you should actually move it. So when you do get alert, your job is to take a look at, okay, is the new order flow leg above my entry? And that is for the reason that we can always create a new leg. For example, if we did something like that right here, this is the low, and we create a new leg, price can always still come back, sweep that low, and then continue pushing higher. And you just prematurely just got stopped out for no reason. We move off of pivot context, for example, and you just prematurely moved your stop loss. I know that's happened a lot. So you want to be sure that your new order flow leg low is created above your entry, right? And GU was actually a good example of that. GU was actually a good example of that. If you go back into the stream, you'll see that that new order flow leg that we were looking at on the GU example was above our initial entry. So that is a valid trail. And if you don't exactly remember, when you watch the recording, you can go back and you know exactly what I'm talking about. Oh man, it froze again? What? I really don't know why that's happening. Like genuinely, that's so strange. It's never happened to me like on any sort of other live stream. Super, super strange. All right, let's go back. I think it's fixed now. I think it's fixed. All right, yeah. But we're good. We should be good. I didn't really draw a whole lot, anyways. I was just mentioning about it. We're good. Okay, sweet. So yeah, what I was mentioning is about the order flow legs. You want that to be, that last line of defense to be above your entry. And again, the GU example is a great example of that. We went over that already. So yes. All right. So let's take a look at let me take a look at my notes real quick. Sorry, yeah, that distracted me, the whole issue here with the screen freeze. That's unfortunate. All right, but yeah, now the trade I took right here, since I'm talking about the pulse model right here, what you can also do is take it a step further. So you know how we did the entry alert right here on the daily? What I did right here is inside that 1 hour gap. Let me turn off the entry. Inside that 1 hour gap, I set this alert. I just did the same exact process because I'm looking to intraday trade this. So I'm not entering off the 1 hour. Inside that 1 hour, I did the entry alert because I wanted to get alerted when we got a 5-minute impulse shift. So the same exact process. This time we're on a 1 hour. So what do? We switch the IRL time frame to 1 hour right there. And I don't really trade CASD. So again, I mark that off and I click apply. And now what I do is, remember the process. You go down into the 5-minute right here and you set your alert. Again, we went a little too far. This is replay, so not going to be a perfect live example of how it all happens. But once we got that creation, I am setting the alert again. So you would go to the 3 dots. There would be a button that says add alert, and then I delete it. Okay. Because I'm looking for a 5-minute impulse shift. And the reason I didn't go into the 1 minute right here is because personally, I don't like trading the 1 hour to 1 minute chain. That is what it's automatically set on if you take a look at the alignment. I'm not a fan of that. I prefer waiting for the 5-minute off the 1 hour and just using 15-minute to 1 minute. Now, logically, fractally, that is the way the alignments work. But me personally, I just never found too much success in it. So I would recommend, honestly, not even use the 1 hour to 1 minute chain right there. I just feel like it's too little of a time frame from a 1 hour basis. I like waiting for the 5 minutes. So that's just like a personal insight that I've been finding as of late. Just 1 hour to 5 minutes work best. And so what I would recommend right here. So that's why I set it on the 5-minute, and just moving forward, this is how that would have looked when you get your entry alert right there. So every time you see the bell, that's the notification being sent. All right. And this right here is when I got alerted. So this is a story about how I caught this. I was literally starving at this point of the day. Once price came into this, it was like 11. I hadn't eaten breakfast. So I decided, all right, I'm going to set my alert. I'm going to go to the kitchen, eat some oatmeal. I was watching some YouTube, eating my meal, watching the YouTube. That's, one of the best things of life, little meal with YouTube, right? And I got my alert. I was like, oh my God, oil just gave the 5-minute. I ran to my room because I wanted to set it up on my laptop. It's already here. Might as well just do it on the actual computer here. I ran to my room, put in the entry, and this is how that out. Actually saw a new 5-minute fair value gap get created right there as well. And I entered off of that one. This one right here. This is the one. And that was that setup, right? And this is how that one played out. That was from this Wednesday. The internet's bugging again. It's out. Stream says no data. Oh man. Oh man, bro. Yeah, the stream went down a little bit for a second. And we're back. Oh, how unfortunate. Refresh and it works, yeah. Yeah, all right, we're back. Sorry about all these technical issues, guys. As I believe in the download in the video, it should all be smooth. All right, yeah. Yeah, we should try Zoom next time if we do something like that. But yeah, that was the entry. I set the alert. So what I was trying to main point of what I was trying to explain is that you can set this for your intraday and your swing entries right here. This is how I was able to catch this. Like I was mentioning, I was in the kitchen, I was eating breakfast. I completely forgot about the setup. I got the alert, ran to my room, got the heads up, entered, and was able to catch 2R off of that 5-minute impulse shift right here. And that was that entry right there. So that is that one, right? Let me just take a look at my notes real quick. So yeah, that was the oil example. Let's take a look at euro. Why are there 2 entry alerts in the chart? So local bend, I set one for that 1 hour. Remember, I set an entry alert for the 1 hour, and then I also had one set up for the daily. So that's why there was 2 entry alerts on the indicator right here. But remember, again, when I'm doing this in real time, in real like example, in real action, I am deleting the entry alert. So I set my alert and then I delete it. And then I just look at the order flow indicator for the levels. I'm not using the entry alert zones, like that green box, or anywhere I should like keep my eye on. I'm using strictly for the order, for the alert. That's it. If that makes sense, if that's what you're asking. And yes, see if this ever loads. Okay, yeah. Let's take a look at the next euro example over here. As we're waiting for that to load. So this is something I wanted to talk about as well over here with this fair value gap that is being marked right? Why is it being marked? Remember, the order flow indicator marks out the most recent order flow across all time frame. So this is why this fair value gap is being marked. This is on the monthly basis, the most recent order flow leg right here, and we have this fair value gap there, right? So of course, doesn't it? It makes sense for that to be marked. But this is where you need to also understand what fair value gaps are not valid. And this is actually an update me and Nils we're working on. We've talked about this, and basically, before I even tell you what the update is, explicit gap resides inside of a fair value area. Don't know what that is. Again, I talk about that all the time in the live streams, in the YouTube videos. If I just start talking about every concept, we're gonna be here for hours. So this is a fair value area, okay? And this fair value gap resides in that. When you have a fair value gap that resides deep inside of a fair value area, that is what I refer to as a fair value area bag, so an FVA bag, where it's not a fair value gap I want to see lower prices from. It's not. It's a fair value gap which I expect to potentially create some sort of resistance, some retracement, some consolidation, ultimately to continue pushing higher. So this is not something I want to see marked for shorts right here, right? So what I do in a scenario like this, and why we added this feature right here, which I actually did not cover yet on the order flow indicator, the force bias feature. So with these buttons right here where it says auto, in scenarios like this, when you have a fair value breakaway gap, just a fair value gap deep inside of a fair area, you want to force your bias. And you can do that by going to this button and forcing it bullish. And what that would do is it will force all the lower time frames above you to also be bullish, give you the bullish order flow, and just not mark that bearish for value because it's not relevant. Why is it not relevant? Because remember what the market does. It only does two things. It does two things. Offer fair value or seek liquidity. When we fail to offer fair value, price will likely opposing liquidity of this price leg. So we have right now a bullish draw on liquidity up towards this high. We're not looking at this fair value gap for lower prices. Okay. So that is why I'm actually bullish here. We're failing to offer fair value. We're also disrespecting this fair value gap completely. We're likely seeking liquidity. So I don't want to look at that monthly bearish fair value gap for lower prices. I'm bullish bias here. So for that reason, and in those scenarios, you would force a bullish bias. And that's why we have that feature right there. Okay. So that is that. And pretty much now that we have a bullish bias, well, if I'm bullish now, I want to be looking for a PD array we can move higher from. So this is finding narrative. First, we look for a bias. Next, we look for a narrative, which is if we're going higher, where are we going higher from? Which we don't answer that on the monthly. We can't answer that. There's no fair value gap we can move on the monthly. So we got to go to the weekly. Where can we move higher from on the weekly? And again, replay. Went a little too far ahead. I'm sure you already know. We can move higher off of this weekly fair value gap. Okay. So this right here is a level where I'm interested in looking for longs from, up towards eventually this high, and first of all towards that high, right? This is your IRL automatically order flow indicator. Okay. So I'm doing my forecast. We know the process. We have our context area. Let's set our entry alert inside of there. Exactly what I did. Weekly fair value gap. We want to make sure this is set to a weekly. Personally, I don't look at CASD, so I always untoggle that myself. And now we're ready. We apply. Great. Great. Now it's there. All right. What I want to do, I want to go down to the lowest time frame I want to look for a potential rejection from, which would be the 1 hour in this case. So I go to the 1 hour. And on the 1 hour, I set my alert right here, hover over it, three dots, add the alert, and then bang. That's it. And then I delete it. So for the sake of this example, I'm going to show you exactly how I do it. That's it. I delete it. And your entry alert should be right there. All right. Actually, let's add that back because I want to show you guys what that also does in terms of 2 candle rejections. So I want to show you guys how that would look because that's actually a pretty feature we have with that. So here it is on the 1 hour, and let's move forward in time. Play that. Wow, man, the internet is tough right here. So if you see right here, we see previous week's low. So the indicator is registering that this is previous week's low formed inside of this IRL right there, right? Let me actually go to the 4 hour right here, which is all right. Here we are on the 4 hour. And we have that previous week's low right here, right? So that's what I was talking about with the 2 candle rejection. It will alert you when you get a sweep of previous week's low, and it will show you any impulse shifts that occur after that. So if we take a look at for example, the navigator, and this is a great segue into this feature that the navigator does. And if you're wondering what the navigator is, because I believe I saw a question on that earlier, this is what shows your kill zone. So you can mark all your kill zones using that. You can have your day separators. You have your mantra, your watermark, which is just what this is down here. So the time frame, the date, your mantra right there. That's all that is. Also, it can show you, and this is huge. I don't know why I haven't talked about this yet. Shows the higher time frame order flow. So just give it a second to load. And over here, you will be able to see what the weekly is doing. So relevant to the time frame using proper time frame alignment, right? So this is the weekly, and this is the 4-hour. So this would be the weekly. So this is the weekly order flow, which is cool to see because if you're operating on the 4-hour, it shows you what order flow on a higher time frame basis you're working out of. So this is that weekly 2 candle rejection. This low right here is simply that same low marked out in time right here, and we're sweeping that. So on a weekly, this is that 2 candle rejection. Sweeping previous week's low, we can move higher off of that sweep. And we get that right here with this 4-hour impulse shift. This is the bell. You guys know by now that that is your alert, your phone, wherever. That's your trading view alert. And then that's your entry. All right. And this was actually a very funny trade the way this played out. So using the order flow indicator, now that we see the alert, just to clean things up again, let's delete that. Just to clean things up again, having it nice and neat. And just want to show you again that the order flow indicator is doing that for you, marking all of the relevant fair value gaps for you. So I just want to show you again how that would look like. And yeah, all right. Again, I'm sorry guys for the major lag we're encountering in the stream. That is like, I'm very, very sorry about that. Like, that is not acceptable. Thanks for sticking, thanks for bearing with me. Yeah, again, I just apologize for that. But over here, we have this here, 4-hour fair value gap created. I just want to show you guys that the order flow indicator registers that it's out of a weekly and it's marking it correctly. And over here from the navigator indicator, it's marking out as well the open, high, low of this current candle, and it'll tell you when that weekly candle closes. There's a little note right here. Also, what the order flow indicator has, actually also forgot to mention this, it has this little chart right here, which shows you essentially, first of all, when you set your bias manually, because if you go to another ticker, your monthly is also going to be set to a bullish bias force, right? It doesn't just say for the chart for this individual euro. If you go to CL and you force a bullish bias, that may be detrimental, right? So that's why we have this little warning right here in bright green, so you know that you did that manually. And if you go to another asset, you should go back to auto. But what this also does, it will show you what are all the higher time frames doing. Is the bullish IRL reacting right now? Is it failing? Is the 4-hour reacting, or is it failing? This is super, super, super neat right there, right? Now, what we have over here, back to the navigator, we have the order flow. But what you could also do is you can customize this as well and use this in a bunch of different ways, fractally even. If you're trying to trade the direction of maybe just one candle, you could just even set this over here to 0, and maybe you just want to see the one weekly candle we are seeing. So for example, set to 0. And it should show just one weekly candle. So if you just want to view price like that, view exactly what the weekly candle is doing. If you're trying to trade the direction, the expansion of a singular candle, that is what that's for. Again, you can see it loading, trying its very hardest right now with my internet to do that simple task. But here we go. There's your one weekly candle. And we have it set to 10, which is just what we found is best number in terms of what an order flow, how many candles are in an order flow like typically. So if we go back to 10, I'll show you what the order flow like looks like. And the reason we have it to 0, the reason I put 0 to show 1, in case, why the heck are you putting 0? is because over here we have a feature where we add one candle right before the order flow origin swing point. So what I mean by that is if you go down, this candle right here is what's being added to the order flow swing point, just to show you just aesthetically, and it makes more sense in your brain, the actual formation of the swing low when you can see the whole swing low, not just like this candle right here. So it helps just seeing the swing points of the weekly right there. But if you remove that, I'll just show you. This candle should get removed. And then over here, then you could just put one if you want to do that as well. There's a couple ways you can do it. But you have a lot of options with that. So you see how I just removed that, and now you don't see the full swing low. I like to have it. It just makes sense in my head. But yeah, there's a lot of ways you can customize this and play with this and use power of 3 concepts if you trade that way. Do all of that. And you could also remove these opening lines if you also just don't like them transposed in time. And you can move this left and right with the placement offset. So I have it at 30. If you want it closer, you can place it to 20, and this will shift it over by those amount of points, essentially. Yeah, so there you go. It shifted a little more to the left right there. So you have a lot of customization with this right here. You can do a whole lot of that. So that's super, super sick feature about the navigator. But yes, back to Euro. This is the entry alert. We saw the entry alert. This is the trade right here. And for this trade, the way I saw it, I got the alert, went into my charts. I like the bodies right here. This is where I set my stop loss. And this is how that played out as we wait for that to happen. Okay. Targeted a static 2R right here. And all this was weekly to 4-hour context. Simple trade. But as you'll see, it was not the simplest delivery. This was actually one of the most absurd trades I've ever had in terms of how close we got to stop loss right here. Generally, I've never seen something like that. And as you saw, we just completed context. Order flow indicator removes it, the daily for value gap, and the daily IRO that we were working with, because it's gone. It's been completed. We don't care anymore. Like, we don't need to use it anymore. So that is exactly how you would utilize that, and how that whole process, how the order flow indicator, how the navigator indicator, how the risk manager indicator, that is how the entry alert indicator, they all work in this really beautiful ecosystem to pretty much streamline my entire model. Exactly, like from everything, from the top-down analysis to the alert, to the risk management, to the easing of psychology, because now you're not worrying about a million different things, and it just streamlines everything so smoothly, so efficiently, and I can literally never trade without them. Now, I'm so happy with what we've built here, and I hope you see it that same way as well. That is all the examples I'm going to go over for today, but yeah, I am in love with these tools, and I am very excited for those of you who have not tried them out yet to try them out. And I hope you learned something today. And again, if you have any further questions, I will be in the Discord and answer any other questions. You can ask me in Nils. Yeah, guys. So I hope that was insightful. Let me think at the top of my head. Is there anything else about the indicator? Yes, I actually wanted to show you guys this feature as well, which we added recently. Before I let you guys go, let's go back over here. I wanted to show you something on the order flow indicator. Just a new update we added as well. Just a little feature, which is pretty neat. Actually, I'll just go to your JPY. I forgot to show you that. This is what I wanted to show you on. So let's take a look at the monthly. You know what's funny? I planned on this being like a 30-minute stream, but in typical Pickle fashion, we've gone for damn near like 2 hours. So, yeah, this has been a lot longer than I expected, but I really didn't want to like leave you guys without really just showing you absolutely everything about it. Because I don't think that would be fair if I ended it like when I thought it would be. But yeah. Funny. That was funny. That's funny to me. Okay. Here we have Euro JPY right here. And again, I want to see this monthly fair value gap. It's not being shown because we forced the bullish bias. So let's go back to auto because that is one that would show right there. All right. So let's just wait for that to load. I mean, I suppose also it's due to how bad the internet's been, why we've gone a little longer than expected. All good, fam. And there it is. There it is. All right, so Euro JPY. And I want to show this example because this is actually very important for those of you who may not be super familiar with my model. This will show you that it's not just every fair value gap that's shown by the indicator is an entry signal. I want to make that very clear to save you a lot of pain. Every single fair value gap that you see marked by the order flow indicator is not an entry signal, and it is not a super high probability entry, right? There's good gaps and there's bad gaps. And you, as the individual operator of the system, have to have and independently think if it's a good gap or a bad gap. And what I mean by that is, for example, we have a monthly fair value gap right here, daily. And this is a very beginner mistake, and I'm going to hammer this. I really want to show this because I already know it's a mistake a lot of people encounter. So let's say you're looking at Euro JPY over here, and we go back, go to this moment in time, and you see that Euro JPY has just entered a monthly fair value gap and created a daily fair value gap away from that. That's nice, right? Monthly to daily, that fits all the boxes, doesn't it? Not exactly. Why is this a low probability gap? Well, first of all, it's not really coming out of a monthly. Why? Because this monthly, if we zoom back out, has been abused already. It's already been mitigated. It already got mitigated right here. Now, what is mitigation? That is simply the first time price comes into a fair value gap, I consider the gap mitigated. So these things right here, after we had the initial rejection, this thing, this thing, this thing, this thing, this is not based off of monthly context. Absolutely not. So for that reason, what we added to the indicator, and what I always have on, is this feature right here, the IRL box mitigation, which stops IRLs from expanding when mitigated. And this will help you avoid really bad mistakes like this, where you may see price tap a monthly, but it was used up like months ago. And then you see monthly to daily, and then you get confused. No, that's not how that works. So I always have that on, because what that does is it's going to stop the gap from drawing at the point of mitigation, which, again, the point of mitigation is right here on this candle. The first time we tap into it, that is when it's been used up. And then this fair value gap is valid to short. And as you can see, that one worked. That's monthly to daily. But these over here, that's not coming out of the monthly. It's just random. And this is just chop. This all right here is chop, and you want to avoid that. That's huge. That is super important to understand, and why this feature has saved a lot. Now, this daily fair value gap, again, it's irrelevant. It came out of nowhere. If you take a look at the higher time frame, we have just been chopping, right? Why did we get so close to completing the context right here to have a huge deep retracement to nothing? Like, we're chopping, all right? This is consolidation. This is all price action you avoid. This daily fair value gap is something you want to avoid. And if we move forward in time, it'll show you that's just chop. You're trading chop. You're trading low probability. That is something you want to avoid. So again, moral of the story for that is it's not just C zone, take zone. You have to factor in, first of all, where did this fair value gap come from? Well, if you take a look at where it's coming from monthly chop. So you have to take into account what are the conditions that this asset has been in. It's been in chop. The monthly is not following through lower. It's not. We're sweeping monthly swing lows. We're having huge unreasonable retracements higher. Go to the weekly. We're getting fair value gaps pointing higher, order flow pointing higher. It's just, it's chop, right? Because now what? What's also interesting about this? How do you determine chop? Fair value gaps have not been respected. So what is this? Bearish for value gap, not respected. Bullish for value gap, not respected. Liquidity void right here, volume imbalance, not respected. We're just chopping, constantly sweeping highs, sweeping lows. This fair value gap that's right here would not be something I'm interested in for IRL to ERL either. Absolutely not. That would not be something I'm interested for IRL to ERL. It's just chop, right? We're moving sideways, not going anywhere. We're not respecting fair value gaps. I hope you guys can see why this is all chop. And I hope you guys can see why that daily fair value gap that I pointed out right there on the daily is not something you want to short. All right. And that's, I just really want to hammer that because I know a lot of newer traders might see these tools and think it's like, it's marking out everything for them. No, there's still some thinking that is required, right? I want to make that very transparent, very clear for you guys. So we're not setting you up for disappointment either, where it's like, oh, this marks out every single zone. It's the holy grail. I don't even have to think myself. No, you still have to think. You still have to know, and be able to identify good conditions and low conditions. Okay, I want to make that very clear. And yeah, I believe that is everything I wanted to speak on now. So yeah, well, let me get a link for you guys real quick, right? Before I send you off. Right, and I think Nils actually can the link right there. If you guys are interested in it and claiming that 40% off your first month discount, right? Because I'm gonna wrap it up here, and yes, maybe have like a little Q&A. Do you have any questions before I let you guys go? I'll answer just a handful maybe. I know we've gone a little longer than expected. Yeah, there it is. So Nils just sent the link right there if you are interested in that and claiming that 40% off discount. You would use that link. Let me see if I can hit. Yeah, so I just pinned it right there. There it is. Not to also forget, like, let's not also, sorry, what am I saying? Forgot to mention that you also, again, you get access to the Discord bots. You get Discord access to a private chat where I'm always inside of and providing, you know, a bunch of in-depth insights, video insights that I don't show the free group. I treat that like a mentorship, right? I give them the insights as if it was like a full-on mentorship with how deep I go into answering all of their questions on price action and just general questions with my model and things like that. So I think that is also one of the biggest bonuses. It's like a mini mentorship for them as well. They have the masterclass access video. It was like a 2-hour, almost 2 hour. But yeah, let me see. Any questions? Does that mean we can discuss the setups on the Discord server? Yeah, that's the whole point of the private group, of the private chat for the Discord server. There's actually even a really neat feature. Let me see if I can get a screenshot of that on for you guys. Where with the Discord alerts, so the IRL to ERL alerts, we have a sentiment feature, which we have buttons that show if you want to trade, skip, or avoid it. Right, and what this does is it builds a good sentiment around what the group is thinking, and that'll make more sense once I get a screenshot here. Just let me pull it up here. So here you see, for example, this is what the IRL rejection radar will look like. Right here. So let's say the daily fair value gap on NZD-JPY has a 4-hour impulse shift rejecting. So this sentiment feature where we have these buttons is what all the members use to build a sentiment. Do majority of members want to skip it because they think it's low probability? Do they want to demand more confirmation? Do you want to trade it? And this overall helps build a sort of general consensus over an idea, and it helps promote a lot of discussion in the actual chat. in the private chat. And yes, we talk about it all the time. We discuss setups. Should you take it? Should you not? I'm in there as well, providing my insights. So yeah, just a really, really great environment and private. They're using the indicators. You guys can all discuss all the setups you like and things like that. But yeah, this feature is super cool as well. They didn't really show this, but this is the IRO rejection radar feature in the Discord. It's a bot, does it all for you for like 50 assets. Do you set limit order on your context? I set them on my reactions out of the context. So if we have like a daily to 1 hour, I'll set my limit on the 1 hour. Never on like the daily. I don't trade the daily like. What's up, Import Wolf? Is there lifetime or annual? At the moment, no. It's just monthly. We may do something like that down the line and offer that down the line. We have this, but at the moment we just have monthly. Are there some setups you like the most? I would say, like, to answer that, I would say my favorite is weekly context. When we have weekly context, that gives you a really clear bias for an entire week. And typically you can even catch like 2 really good setups. So you're catching like maybe 4R on a single weekly context, because weekly context gives you bias for the entirety of a week, right? So you have, first of all, a lot of room for longs. It gives you a very clear bias for the week, right? We're trying to determine the expansion of that next weekly candle. So when you have weekly context, for me, that's my favorite. And I see that often. Monthly context, I mean, that's even nicer if you really think about it. Monthly context gives you bias for an entire month, right? If you have monthly IRO to ERO, that's like an entire month's worth of potential longs. It's rare though. It's not as often as maybe weekly context. So just in terms of frequency and probabilities, my favorite is always like 3 to 4 hour impulse shift. 4 hour entries are my favorite. I love the 4 hour. I love the 4 hour. If I had to choose a favorite time frame, it would be the 4 hour off of week. That's my sweet spot. But yes, guys, gonna wrap it up. Appreciate you all for tuning in. I'll answer one more question. Sorry. When swing trading, do you also do that by futures though? One of the prop firms you mentioned. Nah, I don't swing trade futures. I just swing trade Forex. So the way I have my process is swing trade Forex with Forex props and day trade futures, intraday, futures prop. Okay? That is how I do that. Had to step out for a bit. Is there any video on how you treating the alerts from Discord? Is there Nils? I'm not sure if you made one maybe. If you have any questions on that, I mean, always ask. I'll answer. But there's the masterclass that did help with filtering out what you should trade and what you should not trade in terms of the IRL rejection alert. You have that. How is your back pain? Oh man, I actually got injections, back injections the other day. So hopefully it gets better. Appreciate for asking, Adi. Yeah, hopefully it get better there after the injections. But yeah. All right, but yeah, appreciate you, DP. Glad you tuned in. Glad you all tuned in. I am now officially gonna wrap it up. And yeah, appreciate you for spending some time with me here on this Saturday. And I hope you enjoyed what you saw. I'm really excited for you guys to test out these tools. I think they're game changing. I am in love with them, and I hope you love them too. So peace out, guys. Much love, and I'll see you next time.